Joining us now, Jill Carey-Hall, Bank of America Merrill Lynch, head of US small cap and mid cap strategy. First question, Jill, thanks so much for joining us. First question, just what's your take on this current sell-off today and why small caps are so much in the eye of the storm?
Thanks for having me. Yeah, I think, we're in what's normally been a seasonally weak period for the market, and we've been in a backdrop where the market has looked extended on our view, at least in terms of the S&P 500, when you look at measures like valuation and optimism and how much good news is already priced in. So, we've been more of the view that the market's likely to end the year lower than current levels. And I think there's obviously concern around COVID and the Delta variant and growth. So that's been a big driver of the market from the recent highs. I think there's certainly risk that could impact the trajectory of the market going forward. We've been of the view that value should outperform growth, small cap should outperform large. Both of those have been very correlated to COVID cases. So, certainly if we are to see a big resurgence and, rather than an improvement in this pandemic, that could be a risk to some of those views. But if things do start to improve again, then we would expect that these styles could resume their outperformance trends.
Do you jump in and buy them now on the dip in those sectors and styles that have pulled back significantly already?
Well, look, I think, it's tough because we don't know what's going to happen with COVID, but if cases are to tick lower from here, which a lot of the things that our various teams within research are looking at could suggest that we could see cases decline as we move into the coming months. I think that, there would be a good buying opportunity for, some of these styles that we've been favorable on in terms of value versus growth, in terms of small versus large. And, really, I think it's important to continue watching the data when you look at, what, for example, small versus large are, highly correlated with measures like small business optimism, consumer sentiment, the ISM. A lot of these we have seen a month or two where these have ticked down a bit. So, really we want to watch to see if that's, a persistent trend and we're seeing a broader slowing in terms of the overall global backdrop. Or whether we could see, reopening within the U.S. continue. Small caps are obviously much more exposed to services spending, and we have seen a shift there from goods to services. So, the good news is that small caps haven't really been reflecting a lot of the recovery that we've already seen. They're still trading at, a 15% plus discount to large caps. Historically, they traded about a 3% premium. So, from a valuation perspective, that's one area where a lot of the good news hasn't necessarily been reflected from what we've seen so far.